Hello, my name is Bobby Jones, and I'm a retired nurse anesthetist turned apartment investor. I'm also the founder of On Call Capital, an equity firm that seeks to educate fellow healthcare providers and working professionals about alternative investing while also providing you with opportunities to do so. Now, whenever I'm thinking about a particular investment, I like to make a list of pros and cons to keep things straight in my head. But I think it's important to do this when you're first starting out with any venture that you want to take on. I like to go over the good and bad of the investment concept in general first. So I wanted to do this with the idea of investing in residential real estate. What is it that draws people in or conversely turns them away from this asset type? To be fair, that's a bit of a loaded question. There are single family homes, condominiums, townhomes, small multifamily, and vacation homes. This video in particular will focus on condominiums, where many of the same pros and cons that I talked about in the single family homes video apply, albeit in varying degrees. In general, condominiums are pretty illiquid investments that create steady income so long as you keep occupancy high and turnovers low. But there are some important differences, so let's dive right in. The first pro is that they come at a lower purchase price. Now, this may be the biggest advantage that investing in condos presents. The purchase price for a condominium is typically lower than other residential properties, sometimes giving a 25 to 30% discount over a similarly fashioned single family home. This also results in lower taxes and insurance as well, resulting in less overhead overall. But don't forget about our first con, those monthly association dues. Yeah, these monthly association costs can turn a good investment into a poor one if you're not looking out for them. Make sure you check the association costs when you run your numbers, since these can vary wildly even within the same town. Next is our next pro, fewer repairs to make. Luckily, there's some good that comes from those association fees. They're used to actually manage the exterior parts of the units. You won't have to worry about fixing a roof or landscaping, which can both be very expensive. All you have to do is worry about the interior of the unit, which is a very nice benefit. Your next con, though, is that condos in general are more difficult to sell. You may find that it takes more time to sell your condo than it does for other residential properties. Because condos are still relatively cheap, you may find that most buyers who find you come to the table with a cash offer. This is because the number of approved FHA mortgages has decreased over time, making it harder for investors to buy using leverage. But don't get down. Let's look at that flip side. Our next pro is that it is actually a buyer's market. The nice thing about investing in condominiums is that there is generally less competition than other residential property types. Unless you're in a busy metro, you may find that there's a buyer's market in the condo market, making it a great advantage for cash-heavy investors searching for a deal. Next is our one of our cons here. It's that condos are incredibly reactive to financial markets. Now, this one can be a real downer. During the 2008 financial crisis, a flood of condo foreclosures tanked the values of many condominium communities. First-time homebuyers had little savings and negative equity on their condos, so they ended up giving them back to the banks. One might hope that the condo communities were the first to come back up, but that's actually not the case. In fact, condos were the last assets to benefit from rises in value when the economy improved, as single-family homes recovered much more quickly. The prevailing thought is that condos will always have price depression baked in, so investors swoop in to buy other real estate types first. In short, though, don't buy a condominium and expect capital appreciation unless you have a really long time horizon. Our next pro is that there are greater amenities for residents. Condominiums offer, a vast variety of amenities that are similar to those of apartment communities. This can be quite appealing to residents who want to use swimming pools and exercise rooms and the like. Plus, they don't have to worry about that exterior maintenance, as mentioned earlier. As a result, this makes a condo a highly desirable place to get rented quickly and for a reasonable price. Our next con is that government regulations can be a pain. Certain governmental laws and regulations make it difficult for condo owners to sell their properties. FHA lenders place restrictions on any condo area that has a high ratio of rental units to owner-occupied units. More restrictions are found in areas that have more foreclosures or places that have large amounts of association dues and debt, for instance. Now, our last pro is that, again, like single-family homes, condominiums offer steady income. Residents pay every month. And so long as that price is over the mortgage, maintenance, and management expenses, then you're all good. Plus, the leases are often for a year or longer, just like single family homes and apartments. So that locks in that monthly cash flow for extended periods of time. Now, I hope this list has helped you out in your investment journey. That's going to do it for this video. If you found this information to be helpful, please give me a thumbs up and subscribe to my channel. If you have questions or comments about the video, feel free to comment below. If you're interested in getting access to passive real estate investment opportunities and other alternative investment opportunities, reach out to me here on Facebook, LinkedIn, or Instagram, or my website at www.oncallinvestments.com. Thanks for listening, and I'll see you on the next video.